Hey everyone, it's Heidi from Academy Mortgage. I'm here today with Kaylee Palm from Performance Realty Concepts and Emily Paris from First Arizona Title. And Kaylee, why don't you tell us a little bit about yourself and kind of how you got started in real estate?
Yeah, of course. So I'm Kaylee Palm. I work with Performance Realty Concepts. I'm on a small team, the Impressive Real Estate team. We're located in the West Valley of Arizona, but of course, realtors, we go everywhere. So I'm always all over Arizona. I think I've traveled thousands of miles. I don't even know. But I'm on the team, and it's really nice because then everybody kind of helps each other out when we need it, and there's always somebody who I can call if I need help. So that's helpful for my clients. Then if I don't know the answer, I can call somebody and they can tell me what the answer is. But I'm a newer agent, so this is my first year. I will be 1 year done in October, which I'm very excited about.
Congratulations.
Thank you very much. But I really got into real estate when my mom bought a house in 2016, which was a really good time to buy looking back on it now.
Right.
The agent that we were working with, he was very communicative, and I was just so interested in looking at all the houses and going through the real estate websites like Zillow, Realtor.com, finding anything for my mom so that we could get into a house. And then we had COVID, and I was like, what am I going to do? And so I decided, you know what, I'm just going to go get licensed. So I went to the schooling, failed the school tests a couple times, but then I did pass the state one on the first time, which I was so thankful for because that test is like 5 hours long. The room was freezing, and my chair was super uncomfortable. So I did not want to go back and do it again. Once I got licensed, then I moved to my brokerage, and they started training me right off the bat. And now I'm here. I've gotten a couple deals closed and a couple on the way.
Good. Sounds like you're off to a good start. Emily, what about you? What's your story?
Hi, guys. My name's Emily. I'm with First Arizona Title. I started at my company when I graduated from ASU May 2019. I did the escrow side, or the dark side as we call it in the title world, for about 6 months. Could take a refi pretty much open to close, can still open files if need be. So I have multiple talents. I switched to sales in November of 2019, right before COVID hit. So I got to see the fun side of the job, the events, the networking, the happy hours. One of my favorite events we did was Vision 2020. If only we knew what 2020 was going to bring us, we probably would have called it something else. But yeah, I love my job. My job is really to help agents and lenders kind of build their brand, whether that be through social media, print marketing, building your website, things like that. So my job is really to be a resource to you, to help you kind of take the resources that I use and implement them in your day-to-day life as well.
Okay, great. Well, you guys know I'm on the lending side. I'm licensed in Arizona and Kansas. I do everything from pre-qualifying buyers. So if Kaylee brings me a buyer, I will get them pre-qualified and get them set up so that she can start showing them properties that they qualify for. I can do anything from conventional VA, FHA, USDA loans. So that's kind of my story, and the getting licensed in Kansas is new for me, so I'm excited about that and excited to see kind of how that works for me. I'm originally from Kansas City, so hoping that was a good choice to get licensed out there.
It's always good to know how you get started, buying a house. So obviously you need to get pre-qualified. So what does that process look like?
It's actually very simple. I have a link that I can send out through email, or I can send out through an app where actually the realtor and the buyer can track it, and we can all three track it if they go through the app. They can apply right on the app. And then once they fill out the application, which usually just takes a few minutes, I do a hard credit pull and collect a massive amount of documents from them, especially if they're self-employed, and kind of get a picture of what their debt to income looks like and credit scores and all of that, and figure out, what's the maximum amount that they qualify for. And then obviously you want to, if the maximum amount they qualify for is $600,000, you want to be looking at something that's, in the 520 or 530 range, because there's going to be extra costs involved there with closing costs, and
you might have to pay a little bit more than list price right now too.
Yeah, that's another thing too. There's a lot of cash buyers out in the market, out in Arizona right now. So, you got to be looking at a lot less than what they qualify for, because you might have to go a lot higher than whatever the asking price is.
Heidi, you brought up a good point. So I feel like obviously you work with a lot of agents in general, but how does someone go about getting pre-qualified if they are self-employed?
Okay, so the biggest thing about that, and so one of the things that a lot of self-employed people don't realize, and usually they have a CPA that will do profit and loss statements for them. What they don't realize is we actually require quarterly profit and loss statements. So their CPA is probably only working it up annually, which the self-employed person is requesting that because that saves them money, because they're not paying for it 4 times. However, you actually need quarterly statements for the previous year and up to current. So, for example, it would be all of 2020 and then the first 2 quarters of this year. Then we would need bank statements, business bank statements, personal bank statements for that entire time period. And it all needs to jive with the profit and loss statements, which gets a little sticky sometimes. So, it's not impossible. It's just a little bit trickier with the self-employed people, but I do it every week, and it's not a problem. I enjoy a challenge, so it can be done.
Definitely.
Yeah, I think that's important. I think it's also important, and this is not my area of expertise, but I know that there's a lot of things that you can write off, your miles, things like that. Definitely something a CPA could help you with.
Mm-hmm. If you're self-employed, get a really good CPA, a very thorough one, but also keep very thorough notes for yourself. Same thing like with these investors who they're all self-employed too, because that's most of their income is coming from their income properties. A lot of investors that I run into are moving at such a fast pace, trying to acquire properties, that they're not being as organized as the underwriters need them to be. So if they're trying to purchase one property, I actually need a plethora of documentation on every single property that they own. I need to know how much money they made every single month, or how much money they lost every single month on each property. I need to know the taxes for each property. I need to know how much money they owe on each property. What kind of loan do they have on it? Is it a hard money loan? Is it a conventional loan? That kind of thing. So, and to that end, these investors can only get up to 10 conventional loans before they need to start portfolioing. I don't portfolio. I refer that out. So, so.
And as an investor, do you have to put 20% down, or is that a misconception?
That's a misconception. In fact, most of my investors go a hard money route initially, and then they'll come to me and refinance it. The hard money interest rates can be really high. They can be 12 to 25%, maybe even more. And so their goal is to get out from underneath the hard money loan as quickly as possible and get it into a conventional loan. So if they can get a conventional loan, if they've portfolioed their other properties, or they don't have 10 yet, then that's usually not a problem. It's just a matter of them being organized and being able to provide every single piece of documentation. And it's a lot. It's way more than just standard consumer, standard buyer coming in and doing an FHA loan, or that's simple. So it can be frustrating and stressful, and it takes longer than they would like it to, and takes longer than I would like it to. But that's the nature of the beast. It's the underwriters. I don't have any control over that. That's whatever the underwriters need. That's the way it has to be, or it's not going to happen. So
we don't make the rules; we just follow them.
That's right.
I know. That's my broker. He always says that loan officers they have the nightmare part of the job, and then us as a realtor, we sell the dream and tell everybody like, oh, it's so possible to get a house, but then maybe you actually don't qualify right then. You might have to wait 6 months because your credit needs to be repaired. That's
true. But you would be surprised. I've gotten people with pretty bad credit qualified. There's actually really simple ways that you can increase your credit score pretty quickly. And we can get into that if you guys want to. But there's also down payment assistance programs, what we call DPAs. So let's say they're like, oh, I want to do an FHA loan. I'm a first-time home buyer, but I don't have 3.5% to put down. Well, we can do a down payment assistance program and roll that. That's kind of it's like a second loan, but it's all rolled in together, and so they can almost get into the home for almost nothing. So it's trickier in this market because they're going up against cash buyers, or they're going up against buyers who are qualified for a conventional loan, or that kind of thing. People that are willing to put 20 and 30 and 40% down. It's hard to compete with those people, but it happens. I mean, I'll do my best. I'll do everything I can for my clients. So.
Right.
Kaylee, how have you been navigating the market right now? I know you were just on the phone with a buyer, you said, right?
Yes. So it's tricky. There's new listings coming up every day. Most of the time, new listings come out on Fridays because, listing agents, they prepare for the weekend. That's when
you hold your open house.
Yeah, that's when I have open houses to let more buyers come in that way. And then
is that typically how you pick up a lot of your buyers too, through open houses?
Yeah, a lot of the times they come in, they don't have an agent they're working with, so I start sending them properties that we have on the MLS, which is it's the same thing like what you see on Zillow, but we have more properties, and it's first before it goes on to Zillow or Realtor.com, those websites that buyers are shopping on, and it's updated faster. Like my system will say it's pending before Zillow says it's pending. So I have better control of what is available to these buyers. And a lot of people, you don't really know about that. And you get these lists and you're like, oh, it's the same thing if I were looking on a website. But really, it's not.
Yeah.
And I have off-market properties there too. And so you could put in an offer, and then when you get accepted during your inspection period, go and see it. And if you don't like it, you can back out.
Right.
Like, you think the process is see the house, put an offer in, go through your normal 30-day close. But right now you got to be different because the market is so hot, and just got to do what you got to do to get into a house.
Right.
We had a 1-day close at our office last week, and it was a little crazy, but
cash buyer, right?
It had to be.
Yeah.
Mm-hmm.
Are you seeing that there are more homes being sold as is? More people are more accepting of.
Right. Well, that's what the sellers are wanting to do, is they're taking advantage of the market. They don't have to make repairs. Even in the first place, when the market wasn't hot, they didn't have to make repairs. The purchase contract that we use is as is. It's stated as is. And then we have a separate form used during the inspection period, which is the BINSR. And then the buyer would write down what they want repaired. The seller can say no, and the buyer can choose to either move forward without the repairs or back out that way and not lose their earnest money that they made.
Actually, you made a comment about Zillow, and I feel like I was at Disruption Day last week, which was a really cool real estate conference. But do Zillow and Realtor.com, do those types of websites scare you alongside the idea of iBuyers being your competition? But you gave a good example where, the MLS is updated and you're more aware of what's going on than Zillow. Zillow seems to lag a little bit. You always hear that people look up. My boyfriend does this all the time. He's like, my house is worth this much money. I'm like, no, honey, I work in the industry.
It's not.
It's not. Yeah.
Did you know that Zillow is actually saying now that the Zestimate price that they have listed on there, you can go ahead and consider that an initial offer.
Wow. I didn't know that. Is there
of
any
course
truth
they're gonna,
to that?
Is there any truth to
Yeah.
it? I mean, that came straight from Zillow saying
Maybe
that,
right
but
now.
That's before they go in there and they say, well, there's wood rot on the back of the house.
Associated. Yeah.
Right.
They're going to come in and knock it down as much as they can. But that's
Zillow might be accurate right now with the market being so hot, but
It's a hit or miss, really. I mean, when I do CMAs for someone, I always pull through those websites to show them, like, this is what these websites are saying. That's what buyers are thinking your house is worth. But you have to pull what's recently sold, what's been active in the market for the past 90 days. That'll give you the best indicator of what your home is worth. And even, too, you have to check the county records because sometimes there's, those non-MLS transactions where a daughter's buying a house from their parents or a neighbor's buying it from their friend. The price is always different. You want to make sure you're not missing any data.
Does that reflect in their appraisal usually, or no, you would have to pull that information on your own?
Yeah, that does reflect then in the appraisal because it was recently sold.
Okay.
So they go through that and determine, what's the best
Even if it's a
price.
transfer property or the daughter buys a house from a mom, it's still the same thing.
Well, it has the purchase price, what they bought it for, and then the appraiser will use that to determine, based on the square footage, bedrooms. They go through and determine what everything costs and do their analysis. And then I always try to be careful of that when I do price a house because you don't want the appraisal to come in low. That's a big problem.
What do you do in that situation?
Well, on the buyer's side, then I try to negotiate, we want that to be the purchase price, but on the selling side, you want the buyer to come up with cash in between, which is why we're seeing in a lot of contracts, buyers willing to pay above the appraised value a certain point if it comes in low, not to exceed their initial purchase price that they put in the contract.
Right. And on my end, if, let's say, a home appraises for $500,000 and the buyer is asking for $520,000 and they're getting offers at that, that's fine. They can sell it for $520,000, but we can't finance above appraisal price. So they have to come up with the difference.
Right.
So, which, I mean, if these buyers are coming in and offering 20 over anyway, then they probably don't care. But
so in situations recently, whether it's the buyer that waives appraisal or the seller is asking you to waive the appraisal just because if you don't, someone else will. Everyone wants to move to Phoenix right now. Do you still order the appraisal on your end, whether it's waived or not?
So that's actually not up to me at all. If it's FHA or conventional, that is up to whichever underwriting we push it through. And we're seeing longer appraisal time. It's delaying the process in some cases because there's so much going on, and there's just not enough appraisers out there to get to all of it.
I just learned that being an appraiser is like a long process.
It's
rigorous.
It's super hard to get into, I think.
So I think they're going to change the process to make it a little bit easier. I was at a class about a month ago, but I had no idea how much went into it and how it's a trade that we need more people to get into. Yeah,
it's a dying trade because they've made it so tricky to get into it. And you have to go under a mentor, I think, for years
Yeah,
before you can do it. And
it's not just a start tomorrow type of job.
yeah. But I think once you get there, I think they make pretty good money. The other thing that I'm noticing too is that if on a refi, if there is plenty of equity there, and this is not straight across the board, so don't like quote me on this, but for example, if it's a $500,000 home and the buyer owes $250,000 and they want to refi, no cash out, a lot of times the underwriters are giving appraisal waivers. So that saves a lot of time because they know if the buyers live there a long time, I mean, there's a lot of different factors. If they have good credit, they've lived there a long time, they have 50% equity in the home, they're not going to default on their loan. Underwriting's just giving appraisal waivers. So that I've seen that on some refis. I've told clients that's a possibility, but I cannot promise you that. And even if they say initially we're going to waive the appraisal, that doesn't mean that that could. I mean, it could change. So I don't ever promise it. I just say it could happen, and just keep your fingers crossed and hope for the best.
Well, with FHA buyers, when they order an appraisal on the property, it's an FHA appraisal sticks with the property for 6 months. And so if the seller, they see that and then it's a low appraisal, if they put it back on the market, the next buyer is going to see that FHA appraisal, and then the seller might have to stick with what they have.
Oh, I didn't know that.
Mm-hmm.
Learn something new every day.
Okay. I learned my one thing for the day, so I'm going home.
So if you're an FHA buyer and your appraisal comes in low, you might be in a good spot because the seller might not want to put it back on the market.
So, Kaylee, when you look for clients, do you have an ideal client in mind? Obviously, you said you're 1 year into real estate. I think we all would probably work with everyone, but we have, people that are more similar to us or that maybe we get along with better. Is there a specific type of buyer or seller or client that you look for in general?
Yeah, since I am newer in the industry, I think it's best for me to help those first-time home buyers because I'm still learning it and they have no idea what's going on. So I can guide them being a little bit ahead. I've been working in the industry, tell them, the process of how it goes, and then help them that way through Heidi as a lender, giving them that down payment assistance, guiding them. They're like, what do? We don't know what any of this stuff means. So I help explain and educate them. I do that a lot on my social media as well. I make videos and posts to help educate first-time home buyers because they're now, like the millennials are entering the market right now.
Yeah.
And they can't afford anything.
Yeah. So. They need down payment assistance, and I can help with that.
I'll help get it accepted.
By the way, your videos are hilarious. Everybody needs to go check out Kaylee's social media, her LinkedIn and Instagram, right? Mm-hmm. I don't do much on Instagram. I don't understand it because I'm old. But the other thing is Kaylee is super organized, and I recently paired her up with one of my investors, and she's killing it. He actually is super organized too, so that it's a good fit, I think.
Yeah.
But yeah, I think you've done well even in that area, which is completely different than a first-time home buyer. I mean, that particular investor is nowhere near a first-time home buyer.
Lots of properties, knows the process of what's going on. So that is a little bit different when I'm talking to him. I'm like, oh, I don't have to explain things. He already knows what I'm talking about.
Yeah.
So I feel like millennials, since they are the biggest generation that's going to be buying homes, I myself am one of those one day. I feel like the question of student loans comes up a lot and how you factor that in, if that could stop someone from being able to qualify for a loan.
That's a great question. Okay. Right now, since everybody is in deferment with their student loans, this is actually the perfect time. If you have a ton of student loan debt and you want to get into a home, this is the perfect time. Because we only have to figure in 0.5% of the total amount you owe. So if you owe $100,000 in student loans, we're only going to factor in that you owe $500.
Wow.
So that's critical because that counts
Your
towards
debt.
your debt to income. So
Now's the time.
yeah. So don't delay. I'll send you an email. You can
Yeah.
fill out your app today.
I think I did ask you that question personally. I don't know how long they're deferred for, probably until November, maybe beginning of next year. I'm not sure if there were recent changes, but
Yeah, I think they extended it through the end of the year, but don't quote me on that. I should probably know that.
It's okay. I forget things all the time.
I feel like that's really helpful to know, though, because that's probably the biggest chunk of debt that millennials have.
Right.
It's probably, again, with the misconceptions about real estate, mortgage industry in general, just that, if you don't have what you think is the cookie cutter mold of qualifying for a home, but I think your whole job or our whole job is getting creative with how we do these things. Times are definitely changing. We saw that with COVID. You have to make videos, you have to do podcasts, you have to do things, virtually and kind of make it easier and share that information in a new way.
Sure. Well, and the other thing too is, so even after when nobody's under deferment anymore, the only thing that we're going to factor in as far as your debt on that will be your minimum payment. And so if your minimum payment on your student loans is $100 a month, so, I'm going to write that down, $100 in student loan debt every month. Same thing on your credit cards. I mean, obviously you want to keep your credit card. Ideally, you want to pay it off every month if you can, but you want to keep your debt as low as possible on your credit cards. But if your minimum payment on your credit cards is $100 a month, then I'm going to write that down. The other thing too is multiple payments a month on your credit card. So if you're going to pay $500 a month on your credit card or, towards your credit card, instead pay it every 2 weeks, but it could be the same amount. Pay $250 and then pay $250 2 weeks later. They all report at different times. So it's helpful. And if you really want to get technical about it, you can pull your credit and see what dates they report and then make sure you pay like a week before that. But what I do is I pay every 2 weeks. I pay all of my credit card bills and that kind of thing. I pay every 2 weeks. So it doesn't have to be more money. It just needs to be broken up.
And what do you pay it down to? About 3% or?
I pay down as much as I can.
Okay.
I try to pay off my credit cards every month if I can. So that's the best thing you can do. Don't ever pay a car payment late. Here's the other thing too. If you're in the middle of buying a house,
I know.
Do not apply for credit. Don't buy a car. Don't try to get a new credit card. Don't open a Home Depot card. Do not do anything. If you're unsure about something, don't co-sign for anybody. Call me and say, hey, I'm thinking about doing this really bad idea.
Or if you have to ask, it's probably a no.
Right. But if you are even thinking about buying anything other than groceries and gas, call me. And because otherwise, you'll see smoke come out of my ears. You'll see smoke coming out of Kaylee's ears. You might see smoke coming out of Emily's ears.
Yeah, it probably won't even get to me at that point.
Yeah, you might sleep better. Like, you might not even know about it. But
yeah,
you'll definitely see smoke coming out of our ears, maybe even tears coming down our faces. You don't want that. Just don't do anything stupid. And the other thing, too, is I do have a couple of credit repair companies. So if somebody's a little low, but they're also maybe a few months out from buying a house, if they get connected with one of my credit repair companies, we can get it turned around and get their score bumped up to where it's going to help their interest rate. It's going to improve things overall for them when they are ready to buy. So we've got a couple of those we're working on right now. And
Kaylee, how long do you think that you should, or how far in advance do you think that you should be looking for a home? Does the market change anything with that? I know if I were to go look at something today, my heart would probably be broken because it would be gone tomorrow.
Well, we did have an increase of inventory. So 2 months ago, or May, June was our really hot season here. We had like 3,000 active
Literally
homes.
hot.
It was hot. Yeah. 3,000 to 4,000 active homes and thousands of buyers, more buyers than there were homes available on the market.
Yeah, I think Phoenix was number 1 in the country.
Maricopa County, number 1 in the country.
Yeah, there was one house that I submitted an offer for. There were 92 other offers.
Yeah. And
That's a lot.
It's the same thing for rental properties too. So all these people who are waiting to buy homes can't even get into rental properties. So now they're like, oh, we're already here. Should we stay at the Holiday Inn? And then they're like, well, we have 4 kids. And then they start adding it up and they're like, if we stay at the Holiday Inn, it's going to cost us $4,500 a month. So then they go on Airbnb and they're renting. Now they're going to rent a 2 or 3 bedroom house for the same amount of money, but it works better for their family, right? Mm-hmm. But that same house, if it was a long-term rental, would only maybe get $2,200 a month. So that's why it's like
just bought. Well, it's a VRBO, but he just bought a property in California and bought it in Scottsdale. So.
Yeah,
it's a great location, great investment. He walked in. I asked him if he was excited, and he said no. He wasn't expecting to buy a house, but he left. He left with the house. So
yeah, yeah. I mean, it's hard not to. I mean, I don't know if I had more time and just a whole bunch of money laying around, I'd get into that market right now because these people are railroaded into it. Kind of. They don't have options. Like nobody, unless you're like a single person, maybe you could justify an extended stay.
Exactly what you said. For a family of 4, you're going to pay the same amount of money. Your kids have a little room to breathe. So.
Yeah, and you have a kitchen and that kind of thing. If you're staying at a Holiday Inn, you have 2 queen beds and a bathroom and 1 TV.
1 TV.
One TV with crappy channels.
Yeah. Kaylee, have you seen an increase in lease specs? Like, so let's say the seller was selling their house. Mm-hmm. Buyer puts in an offer, but then the listing agent says, hey, my clients have nowhere to go, or they're also waiting for the home that they just bought to open up. How do you handle that situation, or what have you seen really?
So the most I've seen is 6 months of a post-possession. I mean, that's just a general, we're guessing here. The seller needs to sell their house. Maybe they're in a little bit of debt. They need to sell it, cash out, and move to a new place. They don't know how long it's going to take for them to find something because they're hearing all these stories. They saw how many people put an offer in on their house. So what I do with my buyers, I just say, let's give it to them. They'll rent it back to you. So you'll be making money. You're not going to be paying the mortgage because they're pretty much going to be paying it for you through the rent back. But that is a tricky situation because you can't actually write the agreement into the purchase contract because there's liabilities now where the buyer is the landlord and the seller has become the tenant. So they have to get renter's insurance and make a security deposit. The buyer has to check to make sure the property is clean. I had a recent situation where we did a 2-week post-possession. Even 2 weeks, that was a nightmare. It didn't, the agreement was hard to figure out the terms of, and then the house wasn't left in the best condition of what we wanted, but it was okay.
Yeah. That's where it can get a little tricky because I know a frequently asked question title and escrow get is that, can I get my keys as soon as I sign? No, because until we record, the property still belongs to the original owner. So there's just a lot of
occupancy.
Yes. Yeah. There's some situations that can happen in between that we can't be liable for. So you got to wait till we record.
So we know that Phoenix and the surrounding area it's always been a hot market. It's a great it's where everybody wants to retire. That it's a good place to raise a family too. But with COVID, now we have all of these people who can work from home. So these California people that are making California incomes because the cost of living out there is double, they're like, whoa, we could just move next door and still get our California income and buy a where they were living in maybe a condo in Long Beach for an astronomical amount of money. Now they can buy like a 4,000 square foot home in Gilbert for the same amount of money, and they're still going to have the same income coming in. And so that's part of the reason why we're seeing such a massive like influx of people. It's a lot of people from California. And the other thing too is, which is kind of shifting gears here, but a lot of these homeowners that did the forbearance plan on their mortgage, that has now ended. So we're going to start seeing more inventory coming up here in the next few months, because there's going to be people who just don't have enough equity to maybe refinance it and get back on top of things, or they, weren't saving during that time. So I think we're going to start seeing more inventory here in the next 2 or 3 months. It's still not going to be enough because there's
too many buyers. And California's market does determine Arizona, Texas, and Florida, which are the top 3 states that people are moving to. Their market is affecting everybody else's. So once they slow down, then the rest of the U.S. will slow down. But, I mean, here, we see some homes that are sitting on the market for a while, but that's just because it's not listed at the proper price, and buyers are like, oh, we're not going to pay that much for that house. It's not even move-in ready. It was a rental before.
Yeah.
We don't want that. We want a move-in ready house. So
yeah.
What are you guys seeing with I know the rates were historically low last year. They're still pretty low. I think they dropped recently. Are they kind of evening out again?
It's evening out. It's still way lower than it was 3 years ago.
I heard a long time ago that rates used to be about 20%. And that's just crazy.
That's true.
So,
long time.
Long time ago.
1970s, 1980s maybe. Or even earlier than that, I think. But that used to be the case, and
so 4% doesn't sound too bad anymore.
No, and really most people are getting in for a lot less than 4%. So I'm seeing, and of course it depends too. Like there's some people that pay points and buy it down a little bit, but I'm seeing.
How long do you have to live in your home before you refinance it? Is there a limit?
It's generally 6 months, but it kind of depends too on what kind of loan you have.
Okay. If it's your primary residence or not, or
if it's your primary residence, that's a good question. I'll get back to you. I think it's 6 months.
I think so.
Okay. Well, I mean, that's what some buyers do is that, maybe they buy a house and then they refinance 6 months later, and because the market's so hot, they already see an increase in equity. I think like in the past year, Arizona homes went up like $100K. That's a lot of equity you have in your pocket. So you can do nice renovations to your house. Might as well.
I should have bought a house sooner, because I'm still one of those people that pays $2,000 a month in rent. So we're working on it.
Yeah, and you could get into a house for less than that. It's funny because I talked to a guy last night, and he had no clue, but he was like, my house is worth $480,000. And I said, okay. And he said, well, I only owe like 160. And I was like, well, that's great. And I said, when was the last time you refinanced it? And he said, I've never refinanced it. And I said, well, then you probably you're probably paying 6 or 7% interest. You should think about refinancing it, and not only that, but maybe do a cash out refi and buy up an investment property. Get a little passive income going.
Definitely. I think that a lot of people are afraid. I wasn't in the industry in 2008, but we were all affected by it in some way or another. So I think a lot of people are fearing that the crash is imminent, the world is ending. doomsday.
That's not happening.
It's not happening.
I think
And
it's going
here's-
to level out.
I mean,
it's going to level
the
out.
lending side, not to speak on your behalf, but you're much more critical when it comes to the qualifications that it takes to get a loan. It's not like everyone gets a loan. You still have to meet certain requirements. So I think that's definitely going to protect us.
Yeah. Well, the other thing to think about, and these are kind of loose numbers. I wish I could remember the exact numbers I heard, but if you're comparing, don't quote me on this. So if you're comparing it to 2008, 2009, right now there's 12 million more properties than there were back then. There's also 3 times more buyers in the market. It's fairly easy to buy a home. I mean, it's tricky in Maricopa County, but it's fairly easy, like nationwide. So I don't foresee a crash happening because there's more buyers than there is inventory, and back then there was more inventory than there were buyers. So I don't see that happening. If anything, like I'm kind of curious to see what California looks like in 10 years. Because if everybody leaves from there, because they're not just coming here, they're going to Idaho, they're going to, I think actually New Mexico is going to be like the next hot spot, because everybody's going to get here and they're going to be like, well,
Prices are already getting up to.
Yeah, and we've lived in this VRBO now for 5 months, and we still can't get into a house. So let's go a little bit farther east. New Mexico's a close second.
Maybe
I don't know.
Texas,
That was
who knows?
generous, but I don't know.
Right. Well, I mean, there's different strategies to getting into a house. I know that, they go see a house and then they put an offer in and wait 2 days to get it back, and it's not getting accepted. Well, that's when you have to talk with your realtor and come up with a different strategy of how you're going to get accepted.
Yeah.
Because if you're doing the same repeat thing over, you're just putting in an offer and there's no teeth to it, it's most likely not going to get accepted. You need to have something, wiggle room, to get into a house. You're not going to get a deal in this market.
Yeah.
I know there's people out there, and then I've worked with them too, and it's very frustrating because they are expecting a deal. They think we're in a buyer's market. It's not like that anymore. And then, they waste your time. You go show them a house. They're like, we're not really interested in it because we're not getting it for the price we want.
Yeah.
You're not going to get it for the price you want right now.
Yeah.
What's going to happen is you'll get it. And then later the price will go up, and then you'll have gotten it for a deal.
Yeah. It's funny because 2 years ago I put an offer in on a house, and there were 2 or 3 other offers, and I was the high bidder. I bid over ask because I knew there were other offers in. So I bid $5,000 over, or maybe $7,000 over ask. Anyway, mine was contingent on a sale of a home. They ended up taking an offer that was $5,000 less than mine, which is understandable. That same house, so this was less than 2 years ago, that same house just sold for $250,000 more than what it sold for.
That you put in. Mm-hmm. Someone told me recently that I know that, let's call it the ticket price, or, the purchase price of the home can be scary, especially since homes are going for a lot more than they were 2 years ago. I think especially from a lending standpoint, I think you can't just look at this price of the sticker. If you go to buy a car, that's not what you're looking at. So it kind of should be the same with a home. Just look at if you can afford the monthly payment. I believe you have an app that shows you that. I have a, rent versus buy comparison app as well. Yeah. I mean, $2,000 a month that I pay in rent can get you a pretty nice house. So
yeah,
especially if you refinance it down the road, your payment will probably be less than mine.
I live in a 4-bedroom, 2-bath house, and I pay a lot less than that.
Stop.
No, I do.
I know. I know.
But it's still outright. I mean, there's pros and cons to it. You still have to maintain,
Yeah.
Especially like most houses out here, you have a pool and that can get expensive.
That's a
If
non-negotiable.
it's a saltwater
for
pool,
me.
then yeah, that can be really expensive.
No matter what, it's super expensive. I've lived in my house for less than 2 years, and I started with a sand filter. I had it switched to glass because I heard that was better and it would make my pool cleaner.
You actually have a saltwater pool?
It's not a saltwater pool, but I
Oh.
suppose I could switch it. Now, as
thought
of
that's
last
what Kaylee
month,
meant.
switched to a cartridge filter. So $2,000 later, when I had already just spent $1,000 to switch it to glass. But so there's a lot. I mean, and just the chemicals alone cost you a lot of money, but it's worth it if you can manage the chemicals yourself. I think you save a little bit of money.
And with equity, I mean, you're paying yourself back in the future.
Oh,
so.
it's I mean, there's no way that
We all know the benefits of being a homeowner.
Yeah. And then start below your means and work your way up, because that's the best way to go. If you buy just what you need right now, you know what I mean? Like if you're about to get married and maybe start a family soon, buy a two-bedroom condo. It doesn't need to be anything super crazy, right? Because you can turn around.
It's not my forever home.
Right. Yeah, you can't get attached to it. You can turn around 2 years from now and rent it out and make income on it and buy another house.
That's what I was going to mention earlier, that with the, to me, my mom never owned a home. So it was, it seemed like something unattainable. I think that that's something a lot of people feel, just because of all the misconceptions that it takes to get into being a homeowner. But I think that with the crash, it kind of scared people. Am I going to be able to afford this? Is this something? It's definitely not a risky investment. I think it's way less risky than the stock market. Like I said, the rules have changed now, so I don't think that anyone's putting themselves in a bad position by investing in real estate. That's definitely something I would like to do in the future, and rent out the properties that I buy now that won't work for forever.
Right.
Definitely.
Yeah, and that's why I say start small. It doesn't need to be anything fancy. You can make it nice. You can make it really nice on the inside and whatever. It doesn't, I don't know. I think
that's why it's called your starter home.
Yeah.
You start there,
Yeah.
and then the equity you make off of it, you take that to the next house, and you just work your way up. Maybe like every 2 years.
Yeah.
I thought that until I walked into a Taylor Morrison in Gilbert.
Yeah,
and I was like, this
don't
is
do
going to
that.
be my first home. They said, okay, starting at $700,000.
Yeah, don't do
plus
that.
$100,000 in the upgrades that are in the models.
Right.
You don't. Yeah, you don't want to. That'll forever ruin. Keep that as a goal, but don't. That'll forever ruin your chances of getting there.
Yeah.
You know what I mean? Like
I don't need a
even
new
if you
build
can
yet.
if you can afford it, you're never gonna get to go out to dinner again. You know what I mean? Like
you don't
all
wanna
the
be
things you like
house
doing
poor.
now.
Yeah.
Those
Yeah.
go out the window.
Right.
Yeah.
That's why you want to have room in your budget. And then when you're looking, you get that pre-qual that's your max budget. I personally won't send you homes around
Yeah.
that price.
I have
When
a
I'm
friend
looking
Go
for
way lower.
homes,
right
Yeah.
now.
I go down to maybe it depends where you're at.
Yeah.
And I know the pricing of homes. If you're at 500, I'll probably sending you homes for like 450.
Yeah, that's smart.
And
Need a
then you
little
have
wiggle
wiggle room.
Yeah.
So you're not house poor because
Yeah.
you still want to enjoy your life. And you just got this new house.
I have a friend at my complex who's looking for a home right now, but he had to do some stuff with his credit, and then he's very realistic in the sense that he could probably go up to 600, but he's not looking at the top of his budget.
That's good,
going to
yeah.
set you up for failure. So especially right
I
now.
assume he already has my phone number.
Of course.
Okay. So the other thing I was going to tell you is if your rent, for example, is $2,000 right now.
I don't want to talk about
No. Okay. I'm
I'm
just
just
saying.
joking.
No, I'm just saying like if you, not you, but anybody. So if your rent is $2,000 right now, be looking for homes that you can
what
buy.
home could that get me?
But be looking at something where your payment would be $1,500 a month, because then you can sock away that $500 a month. You know what I mean?
Toward my student loan payment.
Yeah.
your savings or
whatever. Yeah.
fund
like,
money. Who knows?
Yeah. Put it away, because at some point you'll need it for something. Kids are super expensive, by the way.
Heidi, I don't know if you told us how you got into the industry. You seem very knowledgeable about what you do.
That's actually a really long story, and we might need some drinks. Should we take an intermission? Or no, but I have a little bit of a finance background. I was in business for myself for a long time, and then I was a stay-at-home mom for a very long time. And now that is the hardest job, and you do not get any thanks or any appreciation
or any
from
money.
anybody. You just get
You lose money instead.
Yeah, you lose money for real, because you're not putting money into an IRA or anything like that. And then at any rate, due to unforeseen personal reasons, I had to reinvent myself. And so that's kind of where I was like, and I, by the way, I've also been a licensed realtor. Did I tell you that already?
I think you did.
I was a licensed realtor at one point. And I've always had aspirations to get into real estate investing, which I'm still pursuing. And so this kind of made a lot of sense to me. It was a way that I could support my family, and it's something that I'm interested in. So this is kind of how I landed in mortgage lending, and I love it.
Well, there's so many things you can do in real estate. You don't have to be a professional in it. Even as, like an investor, or having multiple investment properties can, supply you financial freedom.
Mm-hmm.
Even especially now, because you get this second home. Maybe you use it on the weekends, or you go up to Sedona or Flagstaff.
Mm-hmm.
You get a second home up there. You can use it when you're out there, but then, Airbnb it out and make some money off of it.
Right.
While other people are paying your mortgage, and then you're pocketing away the extra
We're all
cash.
about the passive income.
That's right. And that's what I have a lot of investors that do that too. And that can be a tricky thing too, with trying to get properties like that through underwriting, when you tell them it's going to be an investment home, I'm going to use it for a VRBO. But the underwriters seem to be kind of adjusting to that. But the investor needs to be super organized, like we were talking about earlier. Spreadsheets, profit and loss statements, quarterly. I can't stress that enough.
I think it's so cool what Kaylee said. Honestly, when I didn't know what a title company was, because I have not bought a home, or my family didn't own one growing up. But my mom has worked in the industry for 10 years. So I'm thankful for that, because I wouldn't have known what a title rep was or a title company was until I got to that stage in life. So I think it's just important to talk about that. It doesn't have to be scary.
Yeah.
We can all do it.
That's right.
So I think that's something that we learned last year too. I am one of the people that got a puppy during COVID, because
Okay.
I love him to death, but he makes life more fun. So I think a lot of people, especially millennials, are thinking of their dogs as their children.
Yeah.
Again, I'm very guilty, but they want bigger homes, either because they're working from home, or a yard for their dog to run in. Eventually kids down the road too. So,
right.
I think that home ownership is more of a goal now than it used to be.
Yeah.
And it's nice to know from what we've talked about that it's definitely an option for most people, I would say.
Well, and it's important too for everybody to realize it's so much easier than you think it is to get into a home. I talked to somebody last week who wanted to get pre-qualified, and she was saying, I don't want my husband to be on the loan because I think he has bad credit. And I was saying, because we're a community property state, he doesn't have to be on the loan. However, I have to pull his credit, and his debts are going to be factored in because you guys are married. His debts are your debts, et cetera, et cetera. Anyway, I said I'm going to have to pull his credit. And so I did. And guess what? They both had really good credit. And I said, this doesn't make any sense. You guys need to talk about this and both get on the loan. It's good for you. And
I think that just goes to show how important it is for communication between, all aspects of the business. One, find your partners, title, home warranty, inspectors, roofing companies. You want to be a resource for your clients down the road. We've had a ton of rain this year. I've seen some of the agents that I follow on social media post, here's my roofer. He's fixing mine from all the storms. If you need his contact information, here it is.
Right.
These are going to be lifelong clients that you help, hopefully purchase all their homes from starter to finish. But yeah, it's just, we've had some crazy situations where we we do a preliminary title commitment, which is essentially, a home's background check, and things come up, and we've had to pull people aside and ask, is there something you're not telling me? Are you married?
Yeah.
I didn't think it was important. Yes, it's very important.
Yeah, I have
or if
stuff like
your
that
name
happen
is
all the time.
spelled wrong on your loan docs, that's also important.
Yeah.
Be straightforward and don't hold anything back, because if you do, it's going to come and bite you in the butt.
Yeah.
later.
We're not here to judge.
Yes. And I had somebody put their nickname, which was just shortened of their real name, down on their application. Well, when I pulled credit, it shows their real name, their full name. Well, we got to pull credit twice, and because it has to match everything, right?
Mhm.
So, lesson learned for everybody. But the thing that I think the three of us have in common, and just people in our industry in general, is we're problem solvers. So we want to figure out a way to make things work for the client. It's important. I mean, this is one of the biggest things they're going to do in life. It's buying a home it's a process, and it's something that people take a lot of pride in, and it's a big deal. It's a big deal to them, and so it's important for us to solve any problems that come up or any roadblocks that come up, and
experience enjoyable. That's more so your guys' side. My side is more to help you. My escrow officers are the one that close the transactions for me. I don't do that part of it, but I'm really thankful for my company. It's the first real job I've ever had. So been at it 2 years, and it's gone by really fast, and it's really fun. I don't sit at a desk all day. I did at first and then realized that was not for me. So I think a lot of people are looking for jobs like that, kind of the freedom that we all laugh about, because as a realtor and lender, you're on, even myself sometimes, you're on call 24/7.
right.
Yes, definitely.
Yeah.
I got into real estate for the freedom, and then your time is really based on everyone else's, your clients. My time is based on your time that is out of your control at some point. But I'm thankful for my company because we have a lot to offer marketing-wise, a lot of opportunities, resources, classes, things like that. But, especially coming out of 2020, we're a locally owned and operated company. We call ourselves a boutique title company, but we still can play the game. We have great resources. So, yeah.
And you guys have great rates too, by the way.
Thank you.
So I'm going to be referring all of my clients to you.
Thank you.
Of course, they can choose whichever title company they want, but
that's important too. Whether you're just getting started in the industry, or there's always things that happen. Again, sometimes a lot of this job is the gray area. So that's where we come in. We be the problem solvers, be creative. But you should interview, Kaylee, like you should interview the people in all aspects, because if you're going to refer them out, you want to make sure that
they're gonna
people,
be a good person. Because if I'm gonna give somebody a recommendation for AC and they do a horrible job, it's gonna look bad on me, and I don't want that to be the case.
Right.
Like, I want to help my clients throughout. After they buy the house, things happen. I want to be able to keep them updated. So I always send out here's like a monthly email, all the homes that sold in your neighborhood, and then they can, check their equity that way, because when you're an FHA buyer, you have that PMI. And so you can kind of watch to see, oh, maybe I can refinance and get rid of that. And then your payment's lower, which is way nicer for you too.
Right. Well, Kaylee, where can potential clients find you? What social media platforms are you on? What's the best way for somebody to get a hold of you?
So the best way is probably my Instagram, which is at Kaylee AZ Realty, and that's also my email. So everything is all the same, even my Facebook, and I believe that's my LinkedIn as well. But all different platforms have the same information. Just my Instagram I'm more focused on because there's, different aspects. They have the stories, post, reels, which is, different elements of different social media apps that Instagram used. Right. So I post more on there and educate, tell people what I'm doing, my life outside of real estate. So you get to know me personally. You're not just seeing, oh, she's just a realtor. She talks real estate all the time. But I try to come up with little funny videos to show.
Your TikTok videos are hilarious.
I need to work on that. But you can call me, text me, email me. My Instagram for business is at Emily Paris _ in Phoenix, because I'm not Emily in Paris, just Emily Paris.
Okay. I am always on LinkedIn, so you can look me up, Heidi Lee, HEIDI. Facebook, Lending by Heidi Lee. I think my Instagram is the same. However,
we'll work on your Instagram.
Yeah, my Instagram needs some work. I don't understand it, but I'm getting there. I'm getting there. I'm trying to figure out this social media thing. But LinkedIn is a great way. My email address is heidi.lee@academymortgage.com.
Thanks, Heidi.
Thank you, guys. This was fun.